We've got the management of CSB Bank joining in. Came out with numbers yesterday. The street was disappointed with the margin performance. A very sharp 21 basis points contraction in NIMs quarter on quarter, and on a year-on-year basis, margins declined by, close to about 80 basis points. The stock declined in trade. Pralay, Mondal, MD and CEO at CSB Bank, is now joining in on the show. Thank you very much, sir, for joining in. This is Rima here. When we spoke last time, you sort of indicated the NIMs have bottomed out in Q4. We've seen further pressure on your net interest margins and now at 3.5%. What led to that? What happened in the quarter? And what's the guidance on margins now?
Good morning, Rima, and good morning to your viewers. You're absolutely right that NIM did decline by around 20 basis points quarter on quarter. And one of the key reasons for this is, the liquidity which was there in the system at that point of time was negative 3 lakh crore in last quarter of last year. And right now there is of course, positivity in terms of liquidity. And we picked up a lot of deposits in the end of the financial year last year, which came in at a slightly higher cost. That effectively had an impact only for 10-15 days last quarter, and this quarter it was for the full quarter. But it is we are seeing that the deposit rates are declining, and hence I think that pressure will ease off quite an extent. And hence Q2 onwards, we should see a more stable NIM. So I think this is a transient kind of a situation. We didn't expect, but I think things are getting better now.
Can you say with confidence that 3.5% is the bottom for margins, and Q2 onwards, the improvement will be visible?
Absolutely. I think this should be the bottom, 3.5, and we should be seeing gradual rise of NIM from here onwards. Our guidance is we should be gradually moving from 3.5 towards 4% over the period of the full year, with an average of around 3.7%.
All right. Hi, Mr. Mondal. Good morning. Good to see you in. Yesterday, the street was a little bit nervous after looking at your numbers because that compression clearly was more than expected. That said, are you seeing signs of credit growth coming back on ground if there was some slowness? You've mentioned in the past, you want to outgrow the industry. So for the year, what kind of loan growth should we be working with? If you could help us out with a rough range. And the ROAs, that's come down to around 1%. But you have mentioned in the past, 1.5% is where it's headed. For this year?
Yes, Nigel. On the ROA part, what I can say is if you look at our trajectory, it always starts low in the first quarter and it gradually picks up. Last year also the same thing happened, and it will happen the same thing this year because our income starts growing in the third and fourth quarter because of the cyclicality of our income, especially on the fees side. So I think we will be able to achieve the guidance of 1.5% for the full year basis. And also the other thing was that we build up our credit book pretty strongly. If you see this quarter, we had grown our wholesale, SME, gold, everything by more than 30%. Retail, of course, we are cautious. And some of the unsecured book is only 3% or lesser of the whole book at this point of time. So from that perspective, obviously, when we grew the wholesale book very strongly, that also was another reason why we had a little bit of a contraction on the NIM, but that is something which we have taken a strategic call to ensure we have a balanced business between all the three businesses. So from that perspective, I think we are stabilizing, and I think our credit growth guidance is very clear. We will be growing at least double the industry at this point of time. And on a specific number, we should be doing somewhere around close to 25% for the year.
Okay. And in that, the loan book guidance, 25% on an aggregate?
Yes, around 25% we'll do it.
And for gold loans, the growth guidance would be?
It should be somewhere around 25 to 30. It will continue to do well as it is, maybe a little higher, but we'll see as it comes.
Okay. Any signs of stress, sir, in the book? As of now, that's the big fear, right? Credit growth is not picking up, and is there gradual stress building in? What is your observation?
No, for us, I don't think stress is a stress anymore at this point of time. Because this quarter, of course, our NPA went up a little bit because of some slippages on the SME side, which are all secured, and that should come back. We have already recovered at least 25 crores out of that slippage, which happened last quarter in this quarter. Also, what happened is, on your specific question, I think our overall guidance of GNPA less than 2, NNPA less than 1, and credit cost less than 50, we are still below that. And where we are today, we'll end the year much lower than this on all the three parameters. But one specific thing that happened last quarter was we transformed the bank into a completely different trajectory. from our tech perspective. So we implemented our core system with 52 surround system around it, and with many other tech transformations. So the team was a little busy on that last quarter. So from an execution perspective, we are focused on building the long-term platform of the bank, and hence some of these things we didn't focus as much as we should have. I think we'll come back strongly in the second quarter.
We don't talk enough about the technology-related investments, but as a business driver, that's a big one. We'll talk, come back mid-quarter, Mr. Mondal, and we can sort of have a chat. Thank you very much for joining us. Just running into market opening, so shorter chat this morning. Appreciate it. So that is CSB Bank with perspective on the results which came through.